After almost a 200% gain or a 3x in just 2 years, I've decided to sell a portion of my C Limited stock. In this video, I'm going to talk about how I got into this stock, what got me into this stock, and why I'm selling at this moment. For starters, C Limited is touted as Amazon of Southeast Asia. That's when I first heard about this stock. It was trading at $200 at that point of time, and I thought it was too expensive. But I was waiting for an opportunity because I was following this stock, and an opportunity came. The stock fell to $59, and that's when I did my first valuation. As you can see on the screen, that's the first video that I posted, and I titled it as C Limited at $59 could be a multi-bagger opportunity. I am buying. And that's when I initiated a position. And in that particular video, I've done a valuation to show the upside. As you all know, I do a reasonable assumptions case and a great execution case. As we all know, C Limited has three different revenue segments. Even though e-commerce is a big portion of it, it also has a gaming platform called Garena and payments platform called C Money. And in the valuation that you are seeing on the screen, I have valued Garena as a separate segment and Shopee and C Money as another separate segment. The reason for this is they're growing at a very different pace and they have very different margins. And that's why I evaluated them separately. And if you note, my 2027 price target for Garena was $5, but Shopee and C Money was $108. So I was predicting $113 by 2027 in the reasonable assumptions case. But today it's already at $136, right? So it's way ahead of its fundamentals. But in that same video, I have also shown the great execution in which I predicted close to $221 for the entire company of C Limited. But based on my reasonable assumptions case, I started investing in this company. But before it got to $136 today, it did go close to $40. And as you can see on the screen, that was the day, August 15th of 2023, it fell 28%. And a lot of people panicked and sold. And a lot of people also cursed me because I said it could be a multi-bagger at $60 and it fell to $40. And I actually did a video on that day saying that is it a sell when it's down 28%? And in that video, I reiterated that the main reason why the stock fell was due to their huge revenue growth deceleration. As you can see on the screen, they only grew 4% that quarter. And there was a lot of negativity. But what people missed at that point of time was they purposefully did not invest in growth for that quarter. They reduced their operating expenses, especially the marketing expenses, to show profit to Wall Street, that they can make profit. But they sacrificed growth, but nobody liked it. But I personally knew that C Limited has a lot of cash. Even now, they have close to $8 billion of cash. So when they have a lot of cash on their balance sheet, they can use that to reaccelerate the growth because they can invest in marketing. Because as you know, in Southeast Asia, if you want to grow, you have to put a lot of money in marketing because there's a lot of competition. So I knew that they just need to flip a switch, and that switch being the marketing expense with this huge cash pile that they have, and they could get back to growth. And that's what I mentioned in that video when it fell to $40 when everybody is panicking. I still bought more on that day. A lot of people actually averaged down with me and they all tripled their money, as you know. And the same thing is actually happening with other stocks that I was positive on, like Elf, Enphase, and also Celsius. All of these companies have great balance sheets. They all want to be the leader in the sector that they're operating in, and they're all well positioned to grow when their time comes. Elf, for example, is going through a phase because the makeup industry is in a downtrend, but it's going to come back. And when it comes back in the next couple of years, it's going to do really well. Same story with Enphase. It's the leader in its sector, microinverters, not solar panels, microinverters and batteries. And when residential solar comes back in the coming years, it's going to do well. It's unfair to expect Enphase to do well in the current economic environment because it's not optimized for residential solar. And the same thing for Celsius as well. And it was due to Pepsi's over order in the past few quarters that led to a huge deceleration in its revenue growth. And it's not Celsius issue, right? But it's going to come back. The energy drinks are much cheaper than uh, coffees, right? Especially the newer generation, they want to have caffeine in the form of an energy drink in the mornings. And we all know that Celsius is a healthier alternative to their competitors like Monster and Red Bull. So Celsius is also well positioned. They are taking market share from their competitors. But anyway, since the topic is C limited, I'm going to get back to it, but I just want to remind you that when a stock goes down, it's not all negative. We have to think about why the stock has fallen down and whether there are chances for it to recover in future or not. And that's when we take a decision whether to sell and take that loss or just average down and wait for our opportunity. So in this particular case, I knew that $40 is even a better price than $59, so I averaged down. But today it came down to $136. And now I have to look at my valuation, wherein I was looking at about $113 stock price by 2027. But this is just 2025, beginning of 2025, it's already at $136. So the stock is way ahead of its fundamentals. So that's when I sell one fourth. Usually I do one third, but in this case I did one fourth. But if it gets higher than 138, maybe if it gets to like $150 or so, I'm going to cut even more. Because with growth stocks like these, who have a lot more to prove in the coming quarters, even one small mistake can drop the stock by like 25-30%. We all have seen what has happened with the likes of Celsius, Enphase, and Elf. They all came down 25-30% in one day. Even the same thing happened to C Limited, right? They were at $60 and one quarter they did not do well and it's down by like 28%. So I want to be safe. I want to book my profit when I see it. I don't want to have a situation like back in 2021 when everybody's up for like 200-300% and they did not sell and they were back to negative 50-60% and they couldn't recover. And I don't want to be in that position. I want to base my buys and sells based on valuation. And when I see a stock is way ahead of its fundamentals, I sell. Of course, I may miss out on an upside. If this goes to $200 tomorrow, it can go there, right? Because we're living in a world where anything can happen. But I want to follow a process for my buys and sells. And that's the reason I sold. Let me know your thoughts in the comments. Thank you so much for watching.